And joining us today from Washington is the economic expert, Mr. Peter Tanous, to discuss the recent U.S. economic data, potential tariffs, and its effect on economic outlook. And welcome to Qnews. It's really nice to have you at the Economic Bulletin. Let me start off by asking you, what would be the latest U.S. inflation data that has just been released today? What is your initial thoughts on the figures, and what key trends do you observe?
The 2.7% number that you mentioned that was released this morning is high, but it is within the expectations of the economic community. So there was no bad surprise here. There were increases in prices in certain food items like eggs. Automobiles have also gone up in price. But the main news here is that the number was what was expected. And that's why today the stock market continues to rise.
And we've heard that President-elect Donald Trump is proposing significant tariffs on imports from countries like China and Canada. What impact could these measures have on consumer prices and the U.S. inflation, Mr. Tanous?
Yeah, this, of course, has been talked about quite a bit. And you quoted Secretary of Treasury Janet Yellen explaining that these would be inflationary and could cause serious problems to the economy. What I find amusing about that is that a first-year economics student could have made the same statement and could have made the same comment. It is obvious that imposing a 10 to 20% surtax, which is what a tariff would be, on items coming into the United States is going to raise prices. And that is inflationary. So don't count on it. This is more likely a starting negotiating position than a fait accompli.
And given today's inflation data and the ongoing tariff discussions, do you expect the Federal Reserve to maintain its course of rate cuts, or could we see a pivot in strategy, maybe?
Yeah, so as you, I think, correctly said earlier, there is a very high probability of a 25 basis point rate cut when the Fed meets next week. What is much more interesting to all of us is what the Fed's outlook is going to be for next year. Because just a couple of months ago, we were expecting further rate cuts well into 2025. That may not be on the table anymore, and that is what investors are going to be looking towards. Is the cut next week, if it comes, going to be one and done, or are we going to be looking forward to more rate cuts? The jury is still out on that, and there's a chance that there may not be many rate cuts after the next one.
And Secretary Janet Yellen has expressed concerns about the impact of tariffs on the U.S. business competitiveness. Do you agree with her assessment?
Yeah, of course I do. And as I mentioned earlier, a first-year economics student would agree with her. It is obvious that imposing tariffs on everything the United States import is going to raise prices. That is obvious. And and if we raise prices, that's going to increase inflation. So don't count on it. As I said earlier, this is more likely a beginning negotiating stance than a fait accompli. But obviously there's concern about it because a lot of our trading partners think that Trump may just be crazy enough to do it. But if he is, he's crazy like a fox. I think he's negotiating.
And Mr. Tanous, can you actually share with us which industries do you think or sectors in the U.S. economy are most likely to feel the impact of these tariffs?
Well, if we're talking about a 10% increase in the tariffs on everything we import, it's going to affect just about every industry where imports are significant, and that's pretty much across the board. Also, remember, he's talking about a 60% tariff on imports from China. We import a $500 billion worth of goods from China, covering a whole wide spectrum of items and industries. So the effects would be totally across the board.
And what are the key risks to the economic stability in 2025, particularly if tariffs are implemented and inflationary pressures persist?
I'll tell you the two biggest ones. One, the
Yes,
one you
please.
just mentioned, tariffs and inflation, number one. But the biggest problem we are going to face in the next 12 to 18 months is the cost of the interest on the national debt. We are paying over $800 billion just in interest costs on the national debt today, and that number is going to go up. To give you an idea of how big that is about the same size as the budget for the national defense, the same size as the $850 billion annual budget for the Defense
Wow.
Department. So I think this is going to be a serious problem.
Well, thank you so much, Mr. Peter Tanous, the economic expert from Washington. Thank you so much for sharing your insights with Q News, our economic bulletin.